Got it.
There we go. How are you?
Good. And yourself?
Good, good. Happy Thursday night. The week is almost over.
Absolutely. Happy Thursday.
How was your day?
Oh, it's just been hectic. With this market, it just seems like things are constantly changing on our part. We're getting notifications throughout the day that interest rates are going up, and just things are just a lot more difficult right now to
Yeah.
kind of get loans through.
I was out with a client this morning. She saw something like 11 o'clock last night and was like, can we go see it this morning? And I was like, the rates went up yesterday before you sent
And
me the
this
property.
afternoon. And this
Yes.
afternoon.
So I was like, you need to update your pre-approval. And I'm
Yeah.
waiting on that.
I
So
locked every single person, mostly in my pipeline. I have a couple of people who had 46.99 right on the cusp of approval. So I
mhm.
had to go in today and lock every single person that if the rates move, your loan no longer qualifies. I had to.
Mm-hmm. Yeah, it's definitely like do or die right now.
Yeah.
You have to be on point. So well, that's good. That's good. Do you find buyers like just giving up and saying forget it, backing out, or they're like going full steam ahead now, like, well, let me hurry up and figure something out?
I mean, the purchase clients are frustrated. They're trying to figure a way out. But when
Mm-hmm.
you think about the purchase buyer, they have nowhere to go. It's either you buy or you go back to renting. So for
Mm-hmm.
them, they don't want to go back to renting. And it's a tough pill to swallow. It's taking them the time to kind of get to that point of accepting this is kind of where the market is and it's where the market is going. So it's a lot of back and forth. There's a lot of discussions that I'm having with them to try to make them feel comfortable as to what's happening. But eventually the purchase buyer will get it. The refinance buyer, if they don't need the cash out, they're just going to not do it. It doesn't make sense.
Yeah, the cost long term is just at this point, it's not a huge difference like it was from, going from 6 to 2.5, like when this all first started, something like
Correct.
that. So now it's just, I'm finding buyers that are just like reflecting back on all the properties that they passed up on. And I'm like, you see, I told you that property was good enough for you. And now it's like, you're getting the slums of the slums of what's
Oh yeah.
left over.
I had people who were complaining before houses that were going $100,000 less passed up on it now trying to get the same offers. We're not in the same market. It's just not going to
Mhm,
happen. And rates
mhm.
are higher on top of that. So it's just much worse now.
It is. And then I have some sellers that they want to buy, but they're like, well, where are we going to go? And I'm like, just like you want perfection, the people that are coming to your property, they will want perfection. So you are in a situation where you get to see from both sides of it. So it's interesting when a buyer becomes a seller and then they look back at how they acted, and especially in this market, it's like, well, now you understand. So
Yeah.
it's crazy. It's
To
it's
me,
crazy.
it makes more sense to pay $30,000 more in a house and secure a 2.5% rate or take a higher interest rate for the life of the loan. That $30,000 over 30 years does nothing to your monthly payment. So, but again, you can't really tell every buyer what financial decision to make. They have to learn that on their own. You try to advise them, but they don't always follow suit. You know that.
Yeah, I had one. I told her today, I said, look, you need to get off of HGTV and you need to go on Home Depot or Lowe's and look at how to fix stuff up, because you want this perfect property for your princess mentality that you have, and you're gonna have to pay another $150,000 to get it. And you can't get it. You don't have the
Yeah.
budget, and it's not even the inventory available, because then you'll be competing with people that are 50 and 75,000 higher than that approved, because now they have to go down to a lower price point so that they could be successful in a bidding war to get to where they're actually approved. I'm like, you're gonna have to start learning how to fix stuff and looking past paint and and
No, no.
wallpaper and carpet, and they just want this perfection. I'm like, it blows my mind.
Yeah, I mean, I seen typically in some markets, it's the lower price points that typically are the ones flying off the shelf. I'm seeing $1 million homes getting listed and going over asking. That's not typical, right?
200,000 over is the
Yeah,
average. At least
yeah.
in Connecticut, I'm looking for some clients now, and the average is about 200,000 over. But ironically, the ones that were overpriced, they're going anywhere from 200. I saw one that went for 600,000 less than the asking price. It's just, it depends on the seller. You have to catch them. Every scenario is different. You don't know what's motivating them to sell, but on average, they're going for 200,000 over asking price. And I've
It
got a
is.
client now 6 hours away, and I'm like, don't make this drive if you're not willing to bid over the asking price, because you're never going to get it. But they,
Yeah. Yeah, I was been doing my research. You would think that with rates going up, with where inflation is, and some of the things that the federal government is trying to do to not buy bonds, that things would start to come down. The projections are that we're going to see this thing continue to be
3
high.
years.
Yeah.
Yeah, they said it's going to be 3 years. And I was like, you know, you really can't predict. Everybody thinks it's going to be like 2008. It's a completely different world,
It's
completely different circumstances. That the reasons that things happened back then are completely different for what they are now. People have money now where they did it before, and they're just taking advantage of, you know, what they can, which is good. But it's like you have to get to a point. I told my one buyer this morning, I said, you have to get to a point where you're going to have to shift your mindset, and it's going to have to be, okay, let me just take, you know, what I can get that's decent before it turns into you're just getting the bottom of the barrel. And she's like, well, I don't want to settle. I feel like I'm settled. I'm like, well, then this is not the market for you to buy. We just,
absolutely.
we'll wait. And she got so disappointed. She was like, don't give up on me. I said, I'm not giving up on you. She said, well, find me a house. I said, I found you 300 houses and you don't like anything that's out there because you have this expectation of what you want, but it's not reality. You've seen what's reality.
Yeah.
And so, yeah, it's going to require a mindset shift, or you just continue to rent.
I had a discussion with a client just today. He started looking about a year now, and he initially had an accepted offer for a co-op. That didn't work out. Then he decided to switch back to a single family. Around the time when we first started, the rate was about 2.6. Then he was upset because the rates went up to about 3.75. This was about 6 months ago. He is now in contract. And I said, you know, we're possibly not even going to be able to get a 3.8 because your score is based on where it is today. You may be at 4.125. And he's just like, wait, what are you talking about? My bank can offer me this. I'm like, call your bank and find out what you can get. Called his bank. Of course, his rate was higher than the 4.125. And, you know, it takes settling in for them to realize that this is what is happening. But if
they
you
don't
look
realize how that equates to their payment. And like she was asking, one was asking about the points, and I guess the lender that she chose just is not explaining things to her, but that's who she wants to stick with or whatever. And I'm like, yeah, you're gonna get charged points. So she's like, well, where did that come from? I'm like, they didn't go over that with you? She's like, no.
Yeah.
I'm like, all right, well, you can buy down points to get your interest rate lower, but yeah, the lender has to charge points. They have to make a living too. And she's like, well, these are more costs than what I thought it was going to be. I was like, well, and it's going to cost you more. I was like, it doesn't make sense to pay points to buy down your rate for the time frame that you want to be in the house. If you're expecting to be there for a long time, this is your forever home, then yeah, it makes sense. But if you're going to be like the average person moving in 5 to 7 years, then just keep that money in your pocket, moving expenses, decorate, save it for a future, your next home, down payment. It just doesn't make sense to waste it if you're not going to be there a long time.
You're absolutely right. You never pay points if you're going to sell or refinance within that 5 to 7 year period. It's like wasted money.
And they just don't understand the intricacies. So that's why we're here to explain things.
Hopefully they all listen. The ones that listen definitely get a good return.
Yeah. And it's funny, the ones that listen, they have a good experience. The ones that don't listen, that think they know everything, that they just think that, you know, just give me a pre-approval letter, and they don't know all that goes on in the back end. Or just open the lockbox. They don't know what goes on in the back end to make these deals work. It's just like you're fighting against a team that is really here to help you. But some people are just so headstrong. They want to do things themselves. They listen to their sister, cousin, mother, brother, father, and everybody else that bought and thinks that their experience is going to be the same. And it's like, no,
it's not.
It's not. Everybody has a different, I say it's just like relationships. You have a different relationship with somebody that your coworker may feel a completely different way about. It's just you bring to the table something different than they do. So their experience with that person is going to be different.
Absolutely. Your energy can bring out something else in that person. So
Mhm. Exactly. So perhaps you know, a way to, like, you know, break things down for them. One day we'll go into that as far as the back end, the nuances, and kind of go step by step with different things, maybe like, you know, on an outline paper to just show step by step, these are the things that's going on in the front end, but then on the back end, you also have to worry about, you know, these things as well, and maybe show how that shift in interest rates affects people's affordability and approval, you know, at different price points too. Because sometimes people think, oh, that's just for the low income people. No, it affects you no matter what price point you're at. And the more
yeah,
you're spending, the more it's going to affect you.
I always
So,
try to make the comparison between renters and buyers. If you're paying $2,500 to rent and you pay $2,700 on a mortgage, at the end of those years, you take the 2,500 times that by 12, times that by 5 years, you know where that money went. It's an investment that you're making in yourself, and you decide to sell, you can take the equity back from your property. When you rent that $2,500, you can't tap into it. The money is gone. So call me biased because this is kind of what I do, but there's so much more upside. If I don't look at a house as just somewhere to live, right? It has to
no, it's a
also be,
business, an
it's a
investment.
business, it's an investment. And I'm looking at the investment, right? Especially with my career, there's no real pension that I'm going to get from my line of work. So I have to make
Mhm.
sure that the investments that I make right now, my home, most people buy their homes, and what they do later on, they rent it or they sell it, rent it, downsize and go elsewhere. But you develop the equity over those 20, 30 years when you're paying the mortgage. Now you can use that vehicle as something that you can retire on.
Exactly.
And that's the way you look at it.
Yeah. Sometimes people are, because of HGTV or just trying to keep up with the Joneses, they get too emotionally caught up in the house itself and what it represents to them. But it's like, you know, if you can, you know, I always tell people, look in your closet, look at what you're buying, look at what you're spending your money on. If those things have importance to you as far as like how it makes you look and how it makes you feel, your home should supersede all of that. So put a pause on, you know, the Jordans and the Chanels and the this and the that, and save that money up so that you can have the home of your dreams. And then, you know, in reverse, get that first, and then you can have the lifestyle that you want. But trying to have the lifestyle first and then going to the home later is backwards.
Yeah, I'm going to chime in on that. You made a valid point. I was speaking to a friend of mine. Many times, New Year's comes around and we have a New Year's resolution of what we want to do.
Mm-hmm.
And the problem that a lot of people have is they tend to compare their lives and what they want to do with the next person.
Mm-hmm.
Instead of making sure that every day I'm a better version of myself, I'm in competition with myself. I am not in competition with Patrice. What you're doing is on your level. But if I continue to stay focused with what I'm doing and I'm bettering myself every single day, if I need to save $20,000 to buy a home, forget someone else is putting $100,000 down. I need to save $20,000 for my purchase.
Mm-hmm.
And being focused with that would allow each person to tackle and achieve their goals instead of trying to live someone else's life.
Right. And it's important because, you know, I tell people, while you're trying to be like so-and-so, so-and-so is trying to be like the next so-and-so. And so you're looking at the first person, but you really have to figure out who they're looking at, the second person, because do you want to be like that second person that they're striving to be? So you're going after something that may not even be in alignment with your beliefs, your goals, your faiths. You're chasing something, and they could be chasing something else, and you're going to follow their path, which might lead to something completely different. And it's like, you know, trying to have this facade or be someone else that you're not. I tell people all the time, you drive down these neighborhoods and you look at these houses, you don't know what's going on behind closed doors. even your own family and friends. How many times have you, like celebrities, for example, something happens, God forbid, one passes away, gets sick, and then you find out all the stuff about them going on in their lives. And you're like, I had no clue. Well, that's because they don't want you to have a clue. People want to have this facade and not share all the time the real things that are, going on. And it's like, when you go to people's houses, there are plenty of times where they could have this house, live in this certain neighborhood, but they don't even have enough money to furnish it. They're, Con Ed is behind 6 months. They're trying to keep up things that they can't keep up with, and you're jealous of, debt and borderline bankruptcy. It's just crazy what people look to instead of, like you said, focusing on yourself and what you need to do, compete with yourself, the old you versus the new you, instead of you and someone else's ideal.
Yeah. I mean, the materialistic things need to kind of go away. It has to be some things that are more important than that, right? Real estate, we're a real estate team, or we're real estate minded. So we know the benefits of real estate, and we know a lot of people who made a lot of money in it. So listen to the professionals and the people who have been making money the whole time with it versus someone that, smoke and mirrors and has no real facts about ever purchasing a property.
Right. And even with that being said, someone who's purchased a property or been in the business recently, not someone that bought 20 years ago or got their license or used to do loans, back in the 90s or early 2000s, things evolve, things, change. And if you're taking advice from someone that got their house with a no doc loan, we're already down the wrong path, because that's, there are things that just don't exist anymore. So
clients like, Gene, why are you asking so many different things? My aunt said, all these documents are not required. Well, when did your mom purchase? Oh, she purchased back in 2004-05. Exactly. This is a stated loan. They had a term for it. They called them ninja loans. Mm-hmm. No income, no asset, no job at all. These are the type of loans that were being given out. Yeah. Nowadays, we must make sure that you credit qualified, all I's are dotted, all T's are crossed. Mm-hmm. You may need an extra cosigner. You may need to kind of get a little extra more money saved up. You may have to have some reserves. But in the long haul, like you mentioned before, Patrice, that we're in a much better position now than we were then, right? And a lot of things are placed by the federal government, like, for example, with this COVID bailout. 2008, we didn't have that. If you couldn't make your mortgage payment, you automatically went right into default. You went into foreclosure. You lost it. Now there are things put into place where you can defer your payment. You can get into a modification up front. So really, there are things in place proactively to identify a problem instead of being reactive, because we realize what can happen on the banking side if we're all reactive, right? If the economy's not doing well and we have a whole bunch of job layoffs and everyone stops making their mortgage payment, the financial institutions start to close down and starts to trickle down on all of us, and trying to catch up is even much more difficult. So the financial companies, to me, are now taking a position of being proactive. Let's get to the people that need our help the most, address it, provide solutions, a solution forward, not just a temporary solution, a long-term solution, keep them in their home. And when they're available, we're deferred on the back end of their mortgage payment.
Right.
So these options, I feel, have put us in a better, sustainable place where I don't feel a lot of individuals are going to lose their homes, right? Because to obtain the American dream of buying a property and then all of a sudden lose it and not be given all the opportunities to keep it, to me, it's a big blow.
Yeah. And people, they don't realize that it takes a lot for a bank to foreclose on a property, and that's not their ideal, solution. They really don't want to have these properties on their books. So it's just a matter of asking, and, you do have to answer the questions, provide the paperwork that's being asked. But, if you don't want to be homeless, then, just getting organized with your paperwork is, I think, a pretty easy thing to do when you weigh your options of being, foreclosed upon, having that on your credit for some time, not being able to purchase again, versus just, figuring out where your paperwork is. And it's just a mindset thing. People don't take things as seriously as they should. And I think this situation we're in now has made people really, without a choice, reevaluate what they're prioritizing and putting as important first.
I'm smiling because it's funny what you just mentioned, because when you look at it, someone comes to you and they're asking you for $400,000 of a loan, but yet on the flip side, they don't want to provide paperwork.
Yeah, they're like, why do you need that? Would you wouldn't even give somebody $400. You want to know what you need it for, and when am I going to get it back? And are you going to sell it? Are you going to give me cash? You're going to how are you going to pay? But it's an entitlement thing that it just blows my mind.
Absolutely. And again, we're trying to verify information. Like, why do you need my pay stubs? Why do you need this? How can I verify? Once you get to the mindset that yes, they need to verify everything, just provide the bank everything. The faster you send the documents in, the faster we can get our job done. The faster you provide Patrice everything you're looking for, the zip code, the room count, square footage, where you're looking, the better it is you can do your job. Mm-hmm. Same thing for me.
Mm-hmm. And it's funny because whenever it's time to re-up on that approval, like, this is expired, we need to get a new one going. They're like, they asked me for all this stuff again. Yeah, because that expired, they gave that to you 3 months ago. Anything can happen in 3 months. You could lose your job. You could be trying to, get over on a system with a job that you don't even have anymore. So yeah, they're going to ask you for your most recent pay stubs again and your bank statements again. And I said that if they're a good lender, they're going to ask you right before closing too, depending on, how long it takes. Anything can happen, but they have this entitlement. I don't need to give you anything. I don't need to do anything, but you need to give me everything. It's like, well, what in what world does that work?
My client unfortunately just called me today and said her husband lost his job. And she said, Gene, can we still close? I said, how? How can you realistically think, I feel bad, but how can we close? How can you repay the bank?
Like you have totally different priorities right now.
Yeah, you just want the house, but how? Why would you even want the house? Why would you want to put yourself under that type of pressure? So I said, listen, I'll give you a week, 2 weeks. We'll hold on to the application. If your husband gets a new job, then we'll just apply the new job and we'll go from there. But if he can't, then we're going to have to cancel the loan. Unfortunately, she's like, okay, let me see what we can do. I'm like, yeah, I don't want to cancel it. Mm-hmm. But we have to provide income to justify why we're handing out money to you.
Mm-hmm. Which is another good lesson in procrastination and perfectionism. You take so long to get these documents, maybe if they got something back to you 3 weeks sooner than, they did, they could close by now before the husband lost the job, or looking for, the most perfect property and nitpicking every little thing. Anything can happen before you close that changes your ability to purchase. So you're focusing on, carpet and paint color or tile or, all these things. And you take 3 weeks to get one bank statement back to somebody. It's costing you your dream.
I think there should be a show that talks about the horror that happens, right, in mortgages and what people do that kind of mess it up. Because I think you hear all the good stuff. Like, yeah, you get a house, white picket fence, everything was okay. But there's a lot that happens on the back end that many don't know. And if you're a first-time buyer and you're not in the financial realm, you don't really know all the things that happen and what you really need to do to get yourself prepared. Now, some people naturally are responsible and they have good credit and they're very organized. The individuals that are not, right, don't know the importance of credit, may not be as organized. They don't know where their W-2s, pay stubs, and Social Security cards are. Those individuals are the ones that really face the most problems when it comes to a financial institution, like some ethnic groups, right? They prefer not to keep money into the bank.
In the bank.
But when you're looking to buy from a US bank and they don't understand certain things like SUSU, that monies are being kept in under the mattress and you now deposit a lump sum for the purpose of a purchase, these become problematic for the bank because we can't source it. So,
and now with the $600 limit of transferring money to people, that's even more of a reason to have your stuff organized and legit, because if they're gonna look at, you know, what you're doing, $600 is important to them now. Everything else you do is really gonna be looked at with a fine tooth comb.
yeah. It just has to be known, if you can't source where the money came from, just don't put it in. You know, the banks are going to do at least a 2 to 3 month look back. So if you can't source it, don't put it in, or speak to your lender. And there's ways to kind of get it as a gift or take money out from a 401k annuity or something like that, versus just taking a lump sum of cash and putting it in, because once it hits your account, we cannot undo it. No bank can undo money once it hits your account. And if we see it, we have to address it. You may have to back it out and not use it as funds to close. We may see an account that has $30,000 in it, and out of the $30,000, we can only give you credit for 20 of it because 10 was deposited incorrectly.
And
There
it's
were situations where someone was signing contracts and they got gift money. The gift money came right into their account, was not done correctly. Then they gave the money to the seller. Seller cashed the check. Seller had to then return their money back to the buyer. Buyer had to return it back into their account. Money had to be sourced and moved their accounts the correct way. So you can imagine you're in a fully executed contract, and then the seller is now being notified after signing contracts that they have to now return the earnest money check and expect that another check is going to be given to them. You can imagine what that does to everyone involved.
They were like, we're canceling this deal. We're going to a whole other buyer, especially in today's market where there's so many options. It's things like that will give people, you know, a scare and not want to move forward with it. They have to really have a level of trust with the scenario that they have to keep going with that, because I know I would be like, this is a little iffy. What's going on?
Yeah, if you don't know, you should ask. And also the attorneys too. If attorney sees a client bring a check that is not under your buyer's name, that should also be a red flag, right? Why is someone else giving me an earnest money check and they're not on the loan?
Right. That's the money that people count and tell you that they have for down payment when it's coming from Uncle Joe. And that's why when people, you know, they don't have any documents checked, nothing checked, but they get this pre-approval letter, which is really a pre-qualification. And I'm like, so when they looked at your documents, what borderline are you? And they just look at you like you're crazy. You're like, we gotta get you back on track because you are not approved, honey.
Everything you're saying is bringing up things that happens in my real life. So just yesterday, a relative of mine called me and said, Gene, I have someone that's placing an offer on an $800,000 house. We don't know the lender. We want you to take a second look. We're going to have the buyer call you. Buyer called me and I said, well, what's going on? Yeah, my wife's buying the property, but we're going to put $400,000 down. And I said, okay, great. What does your wife do? Well, she works for me. I don't have my tax returns yet, but we may buy cash. I said, okay, well, then you don't need me. Show me proof of funds. I'll tell the realtor everything's good. You're ready to go. Oh, I'm not going to do that. Well, then send me your wife's tax return so I can take a look at it. Never sent me any paperwork, right? So just imagine you go into contract with that particular buyer who obviously finagled his pre-approval, an $800,000 home, and you lock it up for 60 to 90 days, only realize that this guy is a bluff. He's not really serious. He can't qualify to buy that house.
It's amazing what people will try to get over on. And I tell people, especially if they're going to buy a co-op, if you are concerned about people knowing what you do with your money and where your money comes from, just put it on your credit card and pay it off, because they're going to look at those bank statements. They're going to look at the transactions, what you're doing, where it's coming from. I had one client I will never forget. He just had a particular affinity for something. I won't say what it is, but it shows up on the bank statement. And I'm like, you might want to put a pause on this before you go to apply for this co-op, because you don't want their personal, judgment to stop you from being able to move into the lender didn't care. But when it comes to a board and you have 6 people who have their own mindsets and thoughts about, what's good character and morals and things like that, any little thing can throw them off. So I'm like, just make your bank statements just about your bills, and everything else, put it on the credit card and pay it off every month, because you do not want things that are iffy showing up on your bank statements. Even like I mentioned before, like Zelling to people back and forth, and PayPal and Cash App and all these things, you start to see a bunch of transactions, and it's not, your regular, let's say, business, like a cash business. It's going to be a red flag to just all of a sudden see all this money coming in. Now, they're helping you with your down payment. We know what it is.
I don't know how buyers go through the NACA. I heard a lot of good things. They have a lot of good benefits doing the NACA loan, but similar to what you're mentioning, NACA goes through your bank statements and puts you through a process for an extensive period of time, looking at every single deposit. Will grill you as to why these things happen. So, but buyers go through it, and but yeah, like you said, if you don't want the bank to see it, then don't put it on a bank statement or a savings account. We will see it.
And they are very, I had a couple clients, when I was in Atlanta doing real estate, it was a very popular program, and it's a little less popular up here, because up here it's expected that you have, a down payment of a significant amount. So the program is it's used, but not as much as it is in the South. But I had a client who just needed help with going through the process, and their application is like a packet, like a booklet. And they have where you fill out this questionnaire. They want to know, how much do you spend on grooming, hair, nails, personal care? Like it's down to the dime that they want everything calculated and accounted for to match with your statement. So it's like, if you don't even know where your money is going, then how do you expect someone to give you a large lump sum and pay it back?
Absolutely. Absolutely. The same thing. I said something to a client of mine, that if you don't know your income and you don't know how much you're going to make at the end of the year, how can I determine what your income is going to be? I can't.
Right. If you don't know, then nobody else will. And I think a lot of the misconceptions that people have about lending, some of it is just naivete. They have no clue where it came from. It's just like a self-imposed rule that they thought they couldn't qualify because of X, Y, Z. And then on the other hand, you have people that are like, well, why does that matter? Why would that matter? Why does a bank care about that? And it's like, well, there are things that will matter just on a character level, but it's on your credit. Basically, it's like, are you good for it? And if you're not good for it, then why would they lend to you?
Yeah, there's certain products like the FHA financing gives the lenders some type of incentive to be able to do some type of loans, lower than perfect credit. Credit could be a bit blemished. You can do a low down payment and still qualify. But people have to understand, some buyers are FHA, some buyers are going to be conventional. If your credit is not the best, most likely you're going to be more of an FHA buyer. And there's some financial things that need to be applied to that, like PMI for the life of the loan. Or if you do have good credit, you get a much lower PMI if you do conventional. So understanding that and knowing the importance of credit will save you for 30 years on a mortgage, making the right decisions up front. If you don't know, then during the pre-approval time is when you get that guidance that maybe you need to do this and get this prepared, or speak to a credit repair company and remove this account, or pay this credit card down to a 20% balance and come back, or get a student income driven repayment plan that's going to lower your student loan payments. That will lower your debt to income ratio. Get into information. Come in and get a pre-approval doesn't guarantee that you have to buy it today or buy it tomorrow. It just prepares you for what's to come.
And I think, I tell people it's a good stepping stone to know which direction to go in also. And I always say, before you pay anything off, also speak to a lender, because things that you think, oh, I'll pay this off and this will help me get qualified more, may be completely insignificant to the lender. They may want you to focus that money on something else, like more towards your down payment, or more towards, maybe a different account, a different way to manage your financial makeup, to see how you could qualify for a better loan product, better home. So I think just fear is one thing that I come across more, and just the lack of knowledge and wanting to get that knowledge really stops people from getting a home. And I'm like, well, if you could sit on Instagram all day and read 500 comments, then you could look at what you need to look at and talk to a lender or talk to a real estate agent to see what your next steps are to purchase a home. And it's a mindset shift that definitely has to occur.
We don't bite.
Right. And it's like, we're here to help you. I had one client that they're just, I guess they had a bad situation before, where they were told something and they went into a loan. Some lender sold them a dream. And so it completely tarnished their idea of the whole experience. And it's like, I said, look, it's like dating. You get one person that you have a bad experience with. Does that stop you from ever dating again? No, you just are a little more sensible about what you look for the next time and what to do the next time. So, don't hold yourself from getting the wealth and getting your dream home because of something bad that happened in the past. You have to move forward. I think cleaning up other people's messes is much more difficult because they have this image in their mind of what the process should have been. And then when they come back the second time around, they're just on edge. What do you get when you get like a second timer who was denied, or things didn't go right before?
Say that one more time.
I said, what do you get with your experience when people come to you for like a second go round, when they got denied before, things didn't go right before?
Oh, I mean, they're more prepared. They're sharper to me at that point, because they know what to expect. They know the process is not easy. They're not entitled at this point. They know they're not guaranteed to get the loan. So pretty much they're more, hey, well, Gene, you tell me what I need to do and I'll just get it done. Especially with the client that gets denied from another lender, they come over to me because they can't get financing. Those are the best clients, because now they'll provide you whatever you want. And, you're kind of really steering the wheel now, and they're in the back seat, allowing you to kind of take them to the promised land. So the second time around is really, really good.
That's good. That's good. The word you said is the entitlement. They lose it. So it's much more easy to work with them once they realize that, you're not entitled to this type of property, this payment, this loan amount that you thought, this is real life now.
At any given time, this loan can get canceled, but you do what you're supposed to do, we'll get the loan done for you, but you're not entitled to this loan.
Right. And I think they forget that anything can change before closing. I tell people, don't get so excited because you got an accepted offer. We're nowhere near the finish line. Like, that's just the beginning. Anything can happen. The appraisal, the inspection, title, rates could go up and knock you out of, being approved. So it's nowhere near the finish line, just, getting that pre-approval or getting the offer accepted. It's a long way to go after that.
Exactly.